One of the most common questions we get asked is whether or not to put a car through the business. Is it tax efficient? Well, the answer depends on a few things. The key drivers are whether to lease or buy, the CO2 emissions of the car, and your personal tax rate. Let's take a look at how the tax is calculated, starting with the company. Your limited company can claim tax relief on a car. It's just a question of how much. Let's look at the two main scenarios. The standard rule for cars is that you can claim a taxable expense each year called the writing down allowance. This is claimed as a percentage of the cost of the car. The writing down allowance depends on the CO2 emissions of the car. If these are over 75 grams per kilometre, the rate is 18%. Over 130 grams per kilometre, and the rate is 8%. If you buy a low or zero emission car, you can claim the full cost of the car as an expense in the year that it's bought. To qualify, the car must have CO2 emissions of 75 grams per kilometre or less and must be a new car. The company can claim corporation tax relief on the writing down allowance. You can claim VAT on the purchase of a car. If your company leases a car, it can claim corporation tax relief on the full annual lease payment. The company can reclaim 50% of the VAT on the lease payments. The expense for corporation tax is the lease payment net of VAT. For example, your limited company leases a car for £500 plus VAT per month, which is £6,000 plus VAT each year. The company can reclaim 50% of the VAT for the year, which is £600. The company can also claim corporation tax relief on the lease payment of £6,000. At the corporation tax rate of 19%, this reduces the company's tax bill by £1,140 each year. As an entrepreneur, you're the business owner and the employee. Your business has had tax relief on the car, but what about you? Unless the car is only used for business trips and is left at the business premises every night, you will be taxed as having a benefit in kind for the private use of the car. For personal tax, it's irrelevant whether the car has been leased or purchased. It's also irrelevant how much private use there is. It's all or nothing. The value of the benefit is based on a percentage of the list price of the car. Importantly, this is the list price of the car when it was new. The actual price you paid, or the fact you bought it second hand, will not affect this list price. The percentage then depends on the CO2 emissions of the car. The percentage is low for an electric car and high for a fuel guzzler. The range is from 7% to 37%. For example, if you're a higher rate taxpayer, you'll pay tax at 40% on the list price of your car, multiplied by the CO2 emissions percentage. If you buy a car with a list price of £30,000 and CO2 emissions of 120 grams per kilometre, your tax bill will be £3,000. So if your personal tax bill is significantly higher than the tax saving made on the car purchased by the company, then you're better off buying the car yourself. If the company pays for fuel, it can reclaim VAT and claim corporation tax relief on the net cost of the fuel. However, you're taxed on the fuel benefit. This is calculated using the same CO2 percentage as the car benefit in kind. HMRC sets a standard value for fuel called the fuel multiplier that the CO2 percentage is applied to. In the tax year 2018-19, the value is £23,400. As with the car benefit, the number of private miles you actually drive is irrelevant. It's all or nothing. For example, if your company pays for all of your fuel, the car has CO2 emissions of 120 grams per kilometre and you're a higher rate taxpayer, your tax bill for fuel will be £2,340 for the year. Even allowing for claiming the VAT back, the company's gross fuel bill would have to be at least £7,200 to get tax relief of £2,340. So unless you're doing a lot of miles, it's likely the personal tax bill will be greater than the company tax saving. It does all come down to specifics, whether you lease or buy, the CO2 emissions and your personal tax rate. However, it is often more tax efficient to simply purchase the car yourself. You can then charge the company for business mileage at 45 pence per mile, dropping to 25 pence per mile after 10,000 miles each year. This is tax deductible for the company and tax-free for you. The obvious exceptions are low-emission cars. As an example, if you have an electric car, the benefit in kind rate is only 7% and there's no fuel benefit. We recently looked at a Tesla for one of our clients. The list price was £60,000 and the company would get tax relief on the full amount in the first year, i.e. it would cut the corporation tax bill by £11,400. As the benefit in kind rate is only 7%, the personal tax rate for the higher rate taxpayer was £1,680. In this case, it was very tax efficient to purchase the car through the company. Tax on companies' cars is complex, so it's always worth asking an expert before you buy. I hope you found this useful. If you have any questions, please get in touch with us at Jon Davies Accountants. We'd love to help.